Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. I'm Mark Gardner. It's the 21st of July, 2026. Stocks were down small overnight, which is pretty surprising considering what's going on with the war in Iran. So we had the US struck Iran for the 10th day straight. 3 soldiers now killed in Iraq and Jordan. And Trump said on Truth Social, every time Iran kills an American soldier, they'll pay many times over, whatever. Iran's president basically said we're at full-scale war now with the US. Hormuz traffic's back to a trickle. We'll cover that in a little bit. I think 30 verified crossings over the last 3 to 4 days. And then now the Houthis are threatening a maritime blockade of Saudi Arabia in the Red Sea, in that strait that I continue to not be able to pronounce. I mean, look, it was fairly mixed overall. We've sort of seen this pattern, quite often where you'd have the chip stocks bounce back up and the software stocks kind of get sold off. There's a little bit there. I think Microsoft got a couple of upgrades last night. They did a deal with AMD. AMD was up 1.3, but the stocks only bounced back around about 0.6, which dragged it out of bear market territory, only just. So Tesla was down on a bit of a downgrade, leading into their earnings. The downgrade was on their vehicle shipping, which, as we all know, Tesla, yes, they do sell cars, but no, it's not the future of the business. Eli Lilly dropped a little bit. His healthcare just generally got sold off, and Apple kind of did its own thing. At the end of the day, we've got this. Obviously, there's a lot of people talking about this Kimi, the Moonshot IPO. Sorry, not IPO, Moonshot company in China. Alibaba has a big stake in it, and we've seen a big bounce in China AI over the last few weeks. Actually, I think it's up around, the ETF's up around about 15% plus. And you can kind of see there that Kimi K3 is in third place at the moment. It's better than Claude Opus 4.8. Not as good as Fable, obviously, and then not as good as ChatGPT 5.6. Grok's kind of given up a little bit for now, but I mean, concerningly, you've got Meta and Google back in the mid-pack here around the 50s. Considering the amount of money these guys have spent, it's pretty damn terrible, I've got to say, to be sitting there with the with the amount of money they've pumped into it, with the amount of resources they've got and the head start they had. They probably need to give themselves an uppercut, I would say. ASX 200 yesterday was largely flat. Nikkei got pretty hit. The Kospi was down near limit early on and then bounced back a little bit. I don't know who it was, but some analysts managed to push out an article yesterday that became extraordinarily popular that said that the new Kimi AI was actually positive for extra demand in memory chip stocks. I had a read through that article. It sounded like a very, very thin thesis at best. But yeah, I won't comment on it too harshly until I've consulted our in-house expert Kai Chen. But yeah, overall we're still down for the week. Nasdaq down 2.3. We finally got an announcement from SpaceX overnight as well around when they're going to have their first earnings, which will be the 4th of August. So that does coincide as well, not only with not only being their first earnings, but a tranche of escrowed shares gets released. So there's only really around about 4 to 6% free float at the moment, which is why it's kind of been minging around a little bit. There's not really, there's not a huge amount out there, and I think they were sort of waiting for the waiting for that to be that inclusion in the Nasdaq and things. But we'd settled it. It's, well, I don't want to say record low, but at 120 last night, 119.85. And despite the fact they got a multi-billion-dollar potential contract for data centers in space. This is that we're back to doing the Iran tracker. I thought I didn't have to produce this HTML anymore after we had that MOU signed, but yeah, here we are. We're not, well, it's not 1 day since last attack. It's like 0 days since last attack. The bottom one I've added in there is the reserves, the US strategic reserves on oil. They released another 5 million barrels last night. It's already at 40-year lows, and you're obviously seeing the dotted lines in the middle there. So at the top is Hormuz traffic, and then the 91.8 is days to get. If we went back to full traffic in Hormuz, it's still going to take 3 months to get back to any kind of normal supply. That doesn't include, obviously, the ships have got to get insurance, etc. If the Houthis do close the Red Sea Strait, that's a categorical disaster because essentially you're going to have to go out Suez and around Africa to get to Asia. That's going to be a disaster for Asia essentially, and the likes of Pakistan and Southeast Asia are very vulnerable and not very energy independent, particularly the likes of Taiwan. I think they're about 10 days energy independent. So, and Trump's now imposed 50% tariffs just as we were coming after the close. 50% tariffs on Canada again after putting, I think, 25% tariffs on Brazil the previous day. If when things aren't working, why not just double down? So the troop build-ups, the charts in the middle there. The dotted line is the exercises that are going on. So that's obviously spiking back up, and you're starting to see troop movements come back up again. The MOU's broken. We're back in full-fledged war. Gold and silver not doing too bad, all things considered. Silver was actually up. Copper was up, ended up again. Platinum down a little bit. Crude, cannot work out, how it's only, like, it was up 3% yesterday. So we're 3% worse than this time yesterday when I did the morning call. And these uranium and lithium, obviously highly cyclical and highly forward priced. So they sort of tend to take the brunt of it. Bitcoin seems to be stabilizing. Not much going on in the currencies overall. And we did get a new UK Prime Minister, but although he is the 6th Prime Minister in under 10 years, so I wouldn't pay too much attention to that. We'll see if this one lasts longer than a head of lettuce, like the poor lady from a few years ago. Michael Burry was in the news as well. He covered half of his Oracle short position at 52-week lows. Oracle getting a bit of a smack, there's a fair few credit default swaps going on for Oracle. And one of my little favourites leading into earnings season, Iron, an Aussie founded but US listed company, jumped 20% overnight as they got Goldman Sachs analysed their contracts and said they're more than a few billion overall. Going to have Alphabet tomorrow morning for earnings, Tesla the following day, Eli Lilly the day after that, and Intel will be of interest as well, I would imagine. And there's quite a few interesting stocks in there. So we'll be, and then we'll have Aussie employment on Thursday. The calendar is in US time there, so that's why it seems like it's a day behind overall. So but I think there's about 80 odd stocks reporting this week at the S&P 500. So there's still plenty of news to come. Everyone's a little bit dour on Tesla. Everyone's a little bit concerned about CapEx, and there was talk in the US and Bloomberg and stuff overnight around, the hyperscalers are damned if they do, damned if they don't. If they start reducing CapEx, that they're seeing that as a signal, like the dot-com bubble. That was the real turnaround point when the telcos started scaling back on CapEx spending. But if they're the numbers are too high, so looking for a bit of a Goldilocks kind of style number for CapEx, being just right, not too much, not too little. We don't want to see them balking, but we don't want to see them spending too much money. I would imagine Freeport-McMoran on Thursday morning be pretty good as well. Copper's been doing Been going great guns. Rest of the month, so well, obviously you got the rest of this week, but next week you've got the likes of Meta, Microsoft, Apple, and Amazon. That will be massive Wednesday and Thursday next week, and I think that's where we'll really start to find out. I think Meta, Microsoft, and Amazon particularly, they are the at-risk hyperscalers in terms of CapEx. I think Google, we're starting with the better ones, Google and Tesla. Well, Tesla's not necessarily a chip stock. Elon's the best probably living engineer, well, best engineer almost in commercial engineering history, particularly when it comes to chips and to getting things done. And he's vertically integrated as well. So I dare say those two are going to be the better of the two, I would imagine. ServiceNow as well will be a bit of a risk event, I would imagine. And just if you want to have a look at which chip stocks we're having a look at, or go to the podcast, just go to nbcmarkets.com.au/podcast, scan the QR code, or go to your favorite podcast platforms and just and essentially look up either Bulls versus Bears or NPC Markets, and you'll find it there. Good episode last week. If even if I do say so myself, but no, we sort of dug deep into the ones those chip stocks we would be very happy to buy on the dip, and obviously with earnings season coming up, pretty important decisions to make. If you want an earnings season watch list, go and subscribe to Mosaic. So mosaic.npcmarkets.com.au. Get your free trial, sign up there. We'll give you a month of the free trial of Platinum, and you'll get all the recommendations in the earnings watch list leading into this earnings season in the US. And you might even catch a little bit of the US stuff as well. The Aussie stuff as well. TLX had some good news this morning, I believe. They reported quarterlies, so probably watch out for that as well. For those of you who are a little bit concerned about what this market's doing and you're holding S&P 500, SPY or FANG or IVV, etc., have a look at our strategy in structured investments. It's available for retail and wholesale, and you can buy the dip in the S&P index over the next 4 months leading into November, where that Christmas rally generally starts, and it costs you about a fifth the amount of capital. So you really only need to put down $17,000 to represent a $100,000 view. All the capital's at risk, but obviously you're not risking the whole 100,000. So you can just go to our homepage and sign up there to learn more. We do only run the retail a couple of times a year. So if you are retail, there's probably an element of urgency around this one. It's going to close probably early next week overall for expressions of interest, but a very capital efficient and smart way to represent your view and not have to stress when the market starts, when and if the market starts to dip. The strategy sort of does it for you in buying that dip. So really smart strategy built for your passive investors. Like I said, if you've got any of those S&P 500 or index investments, definitely worth a look. We do run it biannually. So at least go and have a bit of a nosy around, and we'll maybe come into the next one. Thanks for listening, guys. I think the SPY was sort of largely around sort of unchanged. It wasn't any significant sort of movement overall, and I didn't see any major corporate news as it stood leading into the apart from Hub 24 getting record inflows, which again is the ETFs sort of dominating that in those inflows. Have a great day, everyone, and we will speak again tomorrow.